Hey, what's up guys, Marty here from Prodigy. So in this video I will be explaining to you how to identify structure within the Forex market. So to get a better understanding of what market structure really is, it's really simple. It's basically a trend that consists of higher highs and higher lows, or a trend that consists of lower low with lower highs. It's also a way of understanding price action without using any indicators or volumes. You will see it everywhere on every single time frame. So as you can see here, for my example, let's start on the left. We have a high, then we have a low. And this is actually a uptrend, so the market will go up in a bullish behavior. And when the low surpasses this high, it will automatically create a higher high. And after the higher high, it will create a higher low. So that's a really basic explanation what a uptrend in a market structure is. And it's basically higher highs and higher lows. And for the downtrend, it's the exact opposite. So you have a low, you have a high, and when the high surpasses the low, it creates a lower low. So after that, we can confirm that the downtrend has been created, and it will go back to create a lower low. And when it surpasses the lower low again, it will create another lower low. And then again a lower high, and so forth and so forth. So it's really simple. You can spot it everywhere on the 4-hour, daily, even on a weekly, and on the smaller time frames as well. So now you guys have a basic understanding of what market structure really is. Let's see some live examples and head into the chart. Here we are on the daily time frame of gold, and let me show you this. This might be confusing at first, but trust me, it's really not. So on the left side, where we will start, we have a uptrend, which is a bullish behavior. And let's start off with this high. We have the high here, followed by a low. Then again, price pushes up, surpasses this high, and creates a new higher high, which means we now have a clear uptrend. So after the higher high, price decided to create a higher low, followed by a higher high, another higher low, and creates the last higher high at this point. The downtrend example is the exact same opposite. So when price falls through the low and surpasses this low, it created a lower low. So after the lower low, we will be creating a higher low, followed by a lower low, another higher low, a lower low, a higher low, and another low. So you get the point. It's straightforward. It's really simple. Price is currently at this moment creating a higher high because it is surpassing this last lower high. So now we have another higher high, and I hope you guys understand this. It's really simple. It works on every time frame, and yeah, that's it. So that's it for this video, guys. I want to thank you all for watching this. I hope it helped you out. Like and subscribe to Prodigy, and I'll see you in the next one. Peace.